Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Interesting article that came out today in the Las Vegas Review-Journal about luxury home sales. Luxury home sales increase even as interest rates rise. We're going to talk a lot about this. And we're talking about two different types of home sales: new home sales and then existing home sales. We're going to talk about, we have all the information from the article. Las Vegas-based Home Builders Research. They're a local company that tracks all of the new home, everything happening in new homes. Reported 235 closings of new homes of $1 million and higher during the first 6 months of 2022, 16% higher than the 203 in the first 6 months of 2021. So if you thought 2021 was a hot market for luxury homes, 2022 even hotter, first 6 months. So we're just talking January through June. What are these, like, how is this compared to historical $1 million homes? Like 235 sounds like a lot. It's more than one a day.
It is a lot. I mean, look, Las Vegas is not necessarily known for having such a large luxury market, but it is a very much a growing luxury market. It's growing for a lot of reasons.
Okay, talk about that.
So remember, we are right next door to our big behemoth state of California. So we do have a lot of Californians who come to Las Vegas and they purchase in all price ranges, including the luxury market. So,
which to us is a luxury market, but if you live anywhere else, $1 million is not a luxury market. That's just what a house costs.
Right.
Yeah.
So we do have a lot of people coming in from California who are saying, hey, I can run my business remotely from Vegas, or I can move my business to Vegas. And they purchase luxury homes here. And then remember, Las Vegas is also a big market for second homes. I mean, we're not as big as Florida, and we acknowledge that, but we are still a pretty big market for second homes.
The number of luxury new home sales, these are new homes, even picked up during the second quarter of April through June. So that number we gave you for the first half of this year was actually higher in the second quarter. Even when interest rates started to rise and fear of a potential recession increased, there were 134 closings in the second quarter, up from 101 between January and March. So of that 235 closings, 134 were in the second quarter, 101. And in 2021, there were 112 in the second quarter, 94 in the first. So both first and second quarter, then this year, more.
Right. So
talk about interest rates.
Right. So interest rates interest rates affect everybody, but they don't necessarily affect everybody in the same way. So I think that's an important distinction.
Okay. The conventional wisdom, because this is what they're all thinking out there. Yeah, but interest rates affect the price of a home. Wouldn't it be more for a higher priced home? So
here's the thing about that. In the luxury market, the buyer is a little bit different than in the lower parts of the market. So the buyer in the luxury market is more likely to pay cash for the whole property.
Okay.
The buyer in the luxury market is more likely to, if not pay cash for the whole thing, then put a larger down payment or have other financing. So by other financing, let's look at it a different way. Maybe they're going to borrow the money from their stock portfolio, take a margin loan out, or have some other choices in how they use their funds. And I think that's an important distinction. While people in other price ranges simply don't have those assets to lean on and don't have as many choices for using other money.
Okay, so it's two things is what I'm hearing you say, Oana. One is that they have cash because they're wealthy individuals.
Right.
And for them, taking their $5 million stock portfolio and saying, I have too much in the stock market right now, I'm going to take $1.5 million out, go buy a house somewhere, some real estate.
Maybe.
And have a second home or whatever and just have that. It's still an asset. It's still whatever. That's potentially a thing.
It is potentially a thing. The other thing is maybe if they're sitting on cash, maybe they think that putting the money in real estate makes sense, particularly in an inflationary environment.
Okay. Also, what I'm hearing is the average person out there who is probably, has a job, earns some income, trying to buy a house, and their their income limits the kind of house they can buy.
Mm-hmm.
But potentially there are other people who are super high income, right? They're out there.
And that's what luxury is. I mean, let's face that. Luxury is people who are high income or high net worth.
Half of all homes in California are over $1 million. That's the median for the state.
Mm-hmm.
And there are probably 30 million people
mm-hmm.
in the state of California, right? Is that about
Pretty
right?
close.
55 electoral votes, I think they get.
Mm-hmm.
If you have 12 million homes in the state, that means there's 6 million homes that are potentially worth over $1 million, right?
Mm-hmm.
It doesn't take many of those people to sell their $1 million house in California
Mm-hmm.
and just walk over here and buy a $1 million house, right? So the fact that we have 235 in a whole 6 months is not, I mean, isn't there potentially a huge potential future luxury market? Because, I mean, I don't remember the first, I mean, when I was a kid here in the 70s, I don't know that there were $1 million houses. I think there were houses that were, you know, $500,000 maybe, that were super, the nicest house in town was probably like that, right?
Right.
So this is a new thing, like, and we're potentially going to see, even though the short-term trend maybe looks a bit chaotic and volatile, the long-term trend, which is what we care about, looks like Vegas growing into more luxury homes.
Right. I think the luxury market in Vegas has a lot of room to grow.
Okay.
And, you know, the fact that the summer season is slow, that's not unforeseen. First of all, who wants to go house shopping when it's 114 degrees? Second of all, people are on vacation in summertime. They're not necessarily doing that many financial transactions like purchasing second homes or moving or things like that.
Okay.
So, because remember, these are not necessarily people who have the same constraints as people in other price points.
Okay. It's interesting that you just said that. So we talked about people that are super high income, and they're not going to be as phased because if they want to get the house, they're going to get the house, even if they have to get a loan. They know they can refinance or pay it off, which is the big thing. These are people that aren't as affected by interest rate changes. Jones said, he was one of the people quoted in the article. If you're going to buy a multi-million-dollar home and interest rates go up a point, that's not going to stop you from buying the home. Mm-hmm. Whereas the average person who says, ooh, I can afford $500,000, but then the lender comes back and goes, hey, with new interest rates, you can only afford $425,000. Mm-hmm. So now you're like, oh, darn, I have to change what I'm going to buy.
Well, so here's the interesting thing. The people who are more sensitive to the interest rates, in some ways are catching a break. And what I mean by that is they have more choices because inventory is up.
Okay.
And because they have more choices, they are more likely to come across a seller that might be a little more flexible on price as well.
Okay.
So it's probably kind of a meeting in the middle kind of situation, mm-hmm. where before they were going to go for a $500,000 house. Now maybe they're going for a $450,000 house, but they're not necessarily getting a substantially lesser house.
Every year, every single year, except for maybe 2020, which was a weird year.
And 2021.
No, in 2021, inventory increased in July and August.
Oh, it did? Okay.
Yeah, it did increase in July and August. Prices went up, but inventory increased, even though prices were still going up. That's the chart where the month, mm-hmm. wherever you do every month. The only one was in July it took off. Okay. Supply started decreasing in July of 2020. Erica Geiser, the vice president of marketing for Christopher Homes, their luxury home builder here, said it's not surprising that there has been a slowdown in people buying luxury homes, but that it won't last. Mm-hmm. Part of the matter, she says, that summer in July and August are historically slow. Mm-hmm. We are seeing people, what I believe, are peddling fear mm-hmm. by, oh my gosh, the market's slowing. The number of listings are up and the market now is crashing, right? And it's, so sell your house with me today, right? Call me and list your house and sell it because the market, and don't miss you're going to miss the market crash, kind of a sales pitch. You just said that. I mean, people like aren't in Vegas buying houses in July and August,
No,
especially people that are buying luxury homes there in Europe. They're vacationing.
they're in Cabo. They're on the beach somewhere. They're doing other things, and who can blame them? It's summertime and it's vacation time. But they will be back, and they will get back to work as far as looking for their Las Vegas property, whether it's a primary residence or a second home. And luxury is something that I think is here to stay in Las Vegas, and I think it still has a lot of room to grow. I mean, look, we sold a couple hundred homes in 6 months that are luxury homes. That's not a lot of homes, okay?
It's not.
And we doubled year over year.
Yeah, pretty much.
So there's a lot of room to grow.
I believe there is. Another quote from the article: "Our buyer is on vacation and they're not coming to Vegas when it's 114 degrees."
Yes.
Okay. This is another quote about very wealthy people.
Mm-hmm.
They're certainly worried about their stock portfolio dropping 25%. When they are purchasing a second home or third home, and it's a discretionary decision, it does cause pause if their portfolio dropped. Guys are already expects buyers to return in September and October. Mm-hmm. Well, we're going to see, because what do we do on this channel? What do we monitor?
We monitor all the numbers.
All the numbers. So what we hope is that this home buyer research company puts out some more numbers, mm-hmm. so we can get them. They're really hard to get, because the problem is we can go pull numbers from the MLS. And as you're all aware, they'll pull the whole MLS, which is not even Vegas, it's areas outside of Vegas, and they'll quote that as inventory. We did find out that the numbers nationally, we're going to do a whole video on this, the national amount of inventory, even though it's rising, is still well under a normal stable market, like what we have in a normal market. We're still low. So right. When you see those percentage changes, that's not anything I'm really too concerned about right now. It will be interesting to see September, October. Mm-hmm. I think those will be the most interesting months, because right now inventory is rising, but that's because people aren't buying, and transactions are down because they're always down in the summer of Vegas. So if people try to make that a big deal, I'm not too concerned about that.
Right. You know, and it's interesting because I was chatting with an agent who does business in Cabo, and she was saying that buyers had better bring their A game in the luxury market in Cabo, that list price is just the beginning, mm-hmm. and that they're still selling homes well over list price with multiple offers and that sort of thing. So the luxury market is still strong. Obviously, every market is different, but I'm just giving that as an example to illustrate that interest rates don't impact the luxury market in the same way that they impact the rest of the market. And particularly like a place like Cabo, people are having to pay cash because if they do need a loan, they're going to get a loan stateside and then bring the money to Cabo. They're not getting a loan in Cabo,
right.
Which kind of goes to the point that I said that they might get a margin loan on their stock portfolio or some other equity line of credit to do the transaction if they're not paying cash outright.
When we did our last market update video, we did see the top quarter of the market, the initial list price. The bottom 3 quarters of the market, initial list price wasn't really dropping. It was staying pretty steady. It was the top quarter of the market, which was kind of taking. Now, the top quarter of the market actually goes down to like 750. Mm-hmm. So there's actually more homes between 750 and $1 million probably than above $1 million, because right. It's exponential. As you get higher, there's less and less homes.
Right, and again, those homes I think have a different buyer than the luxury buyer.
Right. Those are high income people. Those are just your generic high income, someone who's a senior manager somewhere, makes 6 figures, an airline pilot, high income, like, a tech worker that is a senior engineer somewhere that just happens to live in Vegas or something, right?
Right. So those are people who have who require income, and those are not necessarily people that have a high net worth.
Right. Okay.
So
they're high income people. They just want a really nice house.
Right. And those are people who are more likely to finance than purchase outright.
Okay. That's very interesting. So it's almost like a barbell. At the bottom of the market, you have these really low end properties where you have a lot of cash investors. We have another great video that we're going to be doing about where the cash buyers are, where the hedge funds are buying specifically. So make sure you subscribe so you can hear where they are. We have all the data on that. It's really great. And then at the other end, the high end, we have cash buyers. And then in the middle a lot, you have finance buyers because they're just like us, right? Mm-hmm. They're just people who have a job and they earn income and then they go out and they buy a house.
Right.
With it.
Yep. So, look, the market is composed of lots of different segments as far as houses are concerned and as far as buyers are concerned. Not all buyers have the same needs or the same constraints. So there is a lot of room for an upside in the luxury market in Las Vegas, particularly since it's a fledgling market. I mean, like I said, we sold a little over 100 houses last year, a little over 200 houses this year in the first 6 months. So that's not a lot of houses. And yet, there's still such a desire to own their piece of glitzy Las Vegas, right?
Yep.
And people do want second homes here. People do want luxury homes as primary residences here. So there is a lot of upside for the luxury market. Yes, it's summertime and the market's slow, but it's slow in every part of the market. I think it's slower probably in the luxury market because, like we said, people are not out buying. They're on vacation. They're doing other things.
We've also seen a pullback in new home building.
Yes.
Which means less inventory. And that could affect the numbers too, because these numbers that are quoted, I think they're the new construction. Mm-hmm. So I don't know that this includes all MLS properties. I think it's just new construction. Mm-hmm. So if new home builders are building fewer homes, then what happens is that you have less inventory in that market. Mm-hmm. That means more of these buyers go back into the resale market, mm-hmm. and then that. But remember, this is sort of that lag thing we talked. We did a whole video on this and said, hey, could rising interest rates cause home prices to go up? And you were like, how would that work? It's like, well, the builders back off building, and then could build the homes they need to build for people to buy aren't there. And then when the market comes back and people are out buying, the home builders are behind. Mm-hmm. And so that people are flooding back into the resale market and paying and competing again for homes.
Right.
Which potentially could happen September, October.
Right. And if it doesn't happen, at the end of this year, it will certainly happen in the spring, as it does almost every year.
I think so. Okay. If you enjoyed the video, please share it, subscribe, hit the notification bell, leave us a comment, and we will see you on the next video.
Bye.
Bye.